What's going on, everyone? James Livingston here again, bringing you another video, kind of helping to identify certain things in trading. This one is going to be in regards to the EMA, the exponential moving average, and how I personally use it when I'm trading, and how I feel it can help you, or if you're someone who's trying to figure out what the EMA is meant for, maybe this video will help you out. So first and foremost, if you haven't watched the last video, I did help identify some of these key levels and how I go about looking for them. You can go check that one out. I'll also leave a link first thing in my description. But first and foremost, with the EMAs, let's go ahead and turn them on. So I personally use the 20 EMA and the 200 EMA when I'm trading. Occasionally I'll mix in the 60, but I try not to have too many lines on my screen, because at the end of the day, all these are just kind of added distractions, as well. They are helpful, don't get me wrong, but they can also be very distracting. The one thing that I like to use these EMAs for, and I feel like it's the best practice to use them, is when it comes to riding a certain trend. So when you use these key levels like we talked about in the last video, and you've identified already that we are in an uptrend or we're in a downtrend, these EMAs are good for essentially riding that trend and knowing when the trend is coming to an end. The EMAs, if you're not familiar, 20 EMA is going to give you data from the last 20 of those candles. So if you're looking at the 30-minute time frame, it is giving you an average based on the last 20 30-minute candles. Same thing with the hourly. If you're on the hourly time frame, it is the last 20 hourly candles. So the EMA, the moving average, is always going to be a lagging indicator. It's never going to give you accurate 100% signals as far as now we're shifting into a trend, or now we're shifting into another trend. You need to use your market structure to identify that. Key levels, market structure, higher highs, higher lows, lower highs, lower lows. Very simple. So when you're using this, you can start off, like I said, going on the bigger picture, look at the overall trend. So like for NASDAQ right now, we can see that overall right now, we are setting in higher lows, higher highs. Let's go on the daily to look a little further into this. So if you look on the daily time frame, and we can see clear as day. I'll grab my box tool. We can see clear as day that we are consistently setting in those higher lows, just like this. Over and over and over again, still setting in higher lows, even though we did partially, for a couple of days there, like 2 weeks or so. You can see here, we did set in a little bit of a downtrend, but overall, the higher end time frames are showing those higher lows, also showing the other end of it, which is the higher highs. Just like this, we're seeing those higher highs consistently being formed until right now, where we're kind of in a little bit of a choppy patch. Go down to the 4 hour. And looking a little bit closer time frame, we already know that the further out is bullish. Let's just focus on the last couple of trading days, week or so. And we can see right now that we are starting to set in again some lower highs. We're starting to switch up that trend a little bit on the upside. Now on the downside, or on the lower end of it, we can still see that we've set in this low here. We're setting in a slightly higher low here, and a higher low here. So we're kind of in the middle of a heavier support and a heavier resistance. We're kind of just in chop. We're in range bound price action over the last week or so. In order to break that, obviously we're looking for those higher end levels to break out. But this is where those EMAs can come into play. So if we have those EMAs on, mine is blue for the 20 and purple-ish for the 200. We can see as we start to look in here that on the 4 hour, one of the larger time frames, we are above the 20 EMA. We are also above the 200 EMA. To me, what that tells me is that we are in an uptrend. Obviously, we already knew that on the larger time frame, but even on the mid time frames, the 4 hour, the 1 hour, we can see that we are above that EMA. We're above that moving average. So what that tells me is there's no real reason to be looking for shorts as of right now, at least not for any kind of larger move. Now again, if we're on the 1 hour, the 4 hour time frame here, that doesn't necessarily mean that the 1 minute, 5 minute, 15 minute couldn't be a little bit bearish, couldn't be possibly below this EMA in their relative time frames, but the overall time frame, the bias right now is for the buyers. So when you hop into a short on something like this, you need to understand that we are above not only setting in market structure, but also above these higher time frame EMAs. So you take these shorts, you need to be in and out. You shouldn't be hanging around for too long, unless you are entering at a key level, for example. In an uptrend, if you're entering at like a daily or weekly key level, as long as you have a strategy where you're putting a stop in the correct spot, that can work. But overall, you shouldn't be going heavy bearish when we are in an uptrend like this and we're trending above our EMAs. So I use EMAs for literally trend tracking, as far as if it's already setting in higher lows, higher highs in the market, where are those EMAs lying? Are we above them? That just gives you added points to check on a checkbox for taking an entry. Again, if we go down to the 30-minute, for example, we can see that price action is starting to stall a little bit. Potentially pattern-wise, a little double top could be in play here. However, we already did kind of create that double top. This is almost like the third attempt at it. But there's opportunities to look for potential reversal patterns, especially being close to a daily key level. But again, at the end of the day, we are still in an uptrend. Even on the 30-minute, we are above the 20 EMA. To me, that doesn't signal to go in heavy for a bearish movement until we start to break underneath and start creating different market structure. Lower highs, lower lows, stuff like that. Going to the 15-minute even, all the way down to, it seems like the 5-minute, we are still tracking above that EMA. So there's nothing here that's telling me too short as of right now. Things can change, obviously. Like I said, if market structure starts to shift, then we can start looking bearish. We can look for a move from possibly the 20 EMA down to the 200 EMA. And then potentially a bounce there, because again, we're in an overall bullish trend right now. So just wanted to kind of make that video just to help you guys out with the EMA. I want to make sure that a lot of you know that at the end of the day, the EMAs, they are lagging indicators. The only true real-time indicator you have is price action, aka market structure, and seeing where those key levels are at based on marking them off like we did in the last video. So if this video was helpful for you guys, I would appreciate a like, maybe comment down below. Let me know what you guys think. Let me know what kind of videos you'd like to see here in the future. Definitely keep an eye on the comments and take some suggestions there. And of course, if you're new to the channel, please hit that subscribe button. It definitely helps and motivates me to keep going with this, so I appreciate that. But anyways, guys, I will see you in the next video. Peace.